Hi Fools, healthcare analyst David Williamson talking about biotech bubble investing. Now, talk of the biotech bubble is everywhere. There are some concerns that it could be bursting and that the biotech market is peaked. Now, the iShares NASDAQ Biotechnology Index, or IBB, sold off 3% yesterday, and the IBB actually did peak exactly a month ago to the day. Since then, it has lost 12% of its value. Now, investors are understandably concerned that the sell-off in recent days will lead to sharper declines in the future. And I do think there is some validity to the biotech bubble speculation. We've seen a lot of enthusiasm in investing in the space and a lot of enthusiasm for bringing new companies to market. We saw 46 biotech IPOs in 2013. We've already seen 25 biotech IPOs already this year, and some of them don't even have assets in phase one. Yesterday, we saw a lot of these developmental stage companies down significantly, which brings me to my point on how to invest in a biotech bubble or potentially a biotech sell-off. And here at The Fool, we're more focused on long-term buy and hold investing than trading, but this sell-off will give investors a chance to get into biotechs with strong underlying businesses that can survive any downturn. And for that reason, I continue to like Gilead and Celgene, along with the big pharma Merck, which I'll get into a little later. Let's start with Gilead. Now, this is a company that's getting a lot of pushback politically for the pricing of their hepatitis C drug, Sovaldi. The cost of treatment for Sovaldi is $84,000, but it has a 90% plus cure rate. Now, this cost is significantly more than the current treatments, but it is also a significantly better drug than the current treatments. Now, there isn't much politicians can do to lower these prices. We have seen a little pushback from payers. I don't think Gilead's going to change their pricing on this at all. They're certainly not doing themselves any favor by giving it away essentially at cost to Egypt, where it will only cost $900, although there is a hepatitis epidemic over there. But I think what all this pushback will do is possibly keep the cost of a combo pill for genotype 1 that Gilead is testing and hoping to get approved soon, lower than it would be in the future. The current combo treatment, which you could create off-label by combining Gilead's drug with one from Johnson & Johnson, the combined cost is $150,000. I think the idea would be to keep Gilead from really spiking the cost of Sovaldi plus lead-ipostera in the future. It could give an opening to AbbVie, which is going to largely compete on price, but I do think these concerns are overblown for Gilead. I think shares have been caught up in the larger sell-off and have been oversold because of this political backlash, and it's still a very strong stock with some incredible sales numbers and a good pipeline as well. Now, speaking about good pipelines, let's talk about Celgene for a second. This is a company that keeps cranking out successful drugs. It just received approval for Otezla in psoriatic arthritis, and it had great trial results against moderate to severe plaque psoriasis as well. Celgene is excellent at getting a drug approved and then moving it into other indications. Otezla, for instance, is going to treat 7 different indications. Celgene is a company that is guiding for tremendous earnings growth, and I don't see any reason why they can't hit it. As these stocks sell off, those earnings will become cheaper. So that is definitely one to have on your radar in case there's a bit of a pullback there. Now, I want to bring up a big pharma. Obviously this is a bit of a biotech segment, but I really like what Merck is doing. It has obviously the immuno-oncology PD-1 drug, 3475, but it also has potential blockbuster candidates in osteoporosis, cardiovascular disease, Alzheimer's in late-stage development, which means Merck has a chance to make some waves in the short term as these move through the clinical development process. I also really like its development deal with Endocyte for Vintafolide. And most excitingly, I've given Merck a hard time for standing pat, but it appears that the company is poised to offload its over-the-counter business, which is brands such as Dr. Scholl's, Claritin, and Coppertone Sunscreen, for between $10 and $12 billion. Now, Reckitt Benckiser is in the lead. It's been the presumed front runner, although we don't have a whole lot of clarity into what the bidding looks like. And it's rumored that Sanofi has jumped in as well. They have an interest. Now, this deal came about when Merck couldn't complete a sale with Novartis, a swap transaction for its units. So Novartis might actually still be a player in here as well. It remains to be seen. But at the end of the day, you want to keep some powder dry for a pullback, but obviously you don't want to just sit on the sidelines waiting for a pullback that may never come. Invest cautiously, invest in good companies, Don't try to speculate too much, and think about stocks you'd want to hold for the long term. That's the best way to play any biotech bubble. Thanks for watching, and Fool on.